What is up, beautiful people? Welcome back to the Zero to Market Engineer series. This is going to be episode 5. In episode 4, I covered how to trade the timeframes, like which timeframes are more significant, which ones do you use for your setup in that current day, in that specific scenario. And in this episode, I'm going to be covering session characteristics. So there's 3 different sessions: New York, Asia, London session. Each one of these happens at a different time and they have their own characteristics. Sessions are important to understand, one of the most important things, because you want to make sure that you're trading a pair that aligns with the session. For me, it's gold. Gold runs during Asia session, so I trade gold during Asia session. For NASDAQ runs during New York session, so you're going to want to trade NASDAQ during New York session. If you're trading Euro USD, Euro is London, right? It moves during London session. So that's what you do. You trade Euro during London session. And there's a lot of different things that we can dive into and understand about the different session characteristics. So without further ado, let's hop in the video. See you guys on the charts. Alright, so let's hop into the charts. Just as I mentioned earlier, there are 3 different sessions: New York, London, Asia session. Each of these happens at their own time. And let me break down the time for you guys. So there are kill zones inside of each sessions, which are like the optimal times that you want to be trading them. So Asia starts at 8 p.m. and the kill zones are typically like 2 hours. So 8 to 10, let's say. London starts at 2 a.m. and I'd say it goes until like 5. And then New York starts at around 7 a.m. That's the open. Then there's like the stock open, which is at 9. There's so much different, like, now that I think about it, there's so much different ways of trading New York session that it's kind of crazy. Like, you can literally take one of these things and you can literally formulate your entire model or system out of just one of these different sections inside of New York. So first of all, the open. The open's very famous for the optimal trade entry, like the Fibonacci retracement before a continuation. And I'd say it goes on until like 11, right? At 10, we have the silver bullet, which is another thing, right? And then at 12, we have the lunch hour, which is known to run on buy side, specifically on like gold and like NASDAQ, for example. So we have lunch hour. Then from lunch hour after that, we have like 2 p.m., which is the beginning of the PM session silver bullet. PM silver bullet. And I'd say it ends at like 3 or 4, whenever the volatility dies down, or like whenever it hits the daily target of where it actually wants to close for the day. Now Asia session isn't 2 hours. Asia session goes until like I'd say 12, and I'd give it like 2 hours. I'd stop trading it at around 12 because that's already midnight open, and price starts doing some of its own things during midnight. And it starts leaning over towards whatever London session wants to do. Now, there are some days where it continues from Asia into London and the move just continues. It might do a continuation from a fair value gap or an IFEG. And so sometimes, you just trade like into the next session, like there isn't going to be a different characteristic. However, if the move has yet to happen during like Asia session and you're looking for the same setup, you think it's going to happen today and it just didn't happen during Asia, then it tends to happen during London, and so that's when you might expect a session characteristic to actually occur. So what are some of the characteristics of each session? Asia session, what I've noticed, tends to create the wick of the daily candle, because notice how this candle doesn't have a wick. So the wick actually typically gets formed during Asia session, because every day, let's hop into the lower time frames and I'll show you guys what I mean. Every day before Asia session is the first session in every new daily candle. So let me zoom in a little bit. Let's go to one that actually did create a wick. So right here, you can see this is the daily candle of the previous day. And New York session slowly comes to an end, right? It's not really moving much because the daily candle has already ended up where it wants to be. Now the new daily candle opens. You can see that we ran down, and this is before any session. This is just a new daily candle that just opened, right? It runs down, and as it starts going up, you notice that what just happened in that big down move is that we just created a wick of the daily candle. So if the market really wants to expand towards buy side, then this would have been the optimal entry to get in, like somewhere from this area right here. And I honestly made a mistake in this day because I was expecting more sell side from here, but it ended up running up above this IFVG, tapping back into it, and then expanding on buy side, right? And so in Asia session, you have that little like lower low, higher high, typically like the breaker model, right? We have a high, we have a lower low, and then we get the higher high. This kind of like, to put it in simple like visual terms, this is what you get. You get the open, you get a little high, you run down creating the wick of the daily candle, and then you use that higher high to go like even higher. And how you determine where it's going, what's going to be the lower low, what's going to be the higher high, is based off of the higher time frame narrative of where the market actually wants to go. And that's why I was wrong in this day, because I expected it to go lower, but it ended up only continuing higher and higher. So in this day, that's what happened. And so the typical characteristic for Asia session, let's zoom out and find that annotation again. So right here, the typical characteristic for Asia session is going to be higher high, low, higher, high, low, higher high, high, low, high. Why did that seem so complicated to me right now? We get a high, we get a lower low, and a higher high, okay? In a bullish scenario, and in a bearish scenario, we get a low, we get a higher high, and then we get a lower low. So this is Asia session characteristic. And it's typically associated with the breaker block. And in my case, I like to use the breaker block with a IFVG to be able to get into the trade before it actually happens. Now let me move my camera out of the way. There you go. So Asia session characteristic is typically creating the wick of the daily candle. So I'd say some keynotes for Asia is to pay attention to the daily candle, pay attention to the daily candle wick, pay attention to like the breaker block structure, lower low, higher high, and then you can also use IFVGs. So that's Asia session characteristic, where we typically get the open of the new daily candle, and the daily candle begins running on some sort of expansion. It's moving towards the target, it's creating a wick, it's manipulating in the opposite direction. Now for London session, let's hop back into that same range. Let's see what London session typically does. Okay, this is a perfect London session as well. So London session has a silver bullet as well. And that silver bullet typically happens at 3 a.m., 1 hour after the open. The open is at 2 a.m. And London session is known for the Judas swing. Judas, I'm pretty sure this name comes from like the Bible. It betrays like the guy that betrays Jesus. And the reason for this name is because this Judas swing is betraying you. It's betraying you because it's moving in the opposite direction of the actual bias. So it's typically that fake out leg. And Judas swing will move in the opposite direction. And this is the first hour of London session. So typically from the first hour, you begin getting that move in the opposite direction. And this is actually not the best representation because this ended up being a pretty big move. And that typically like is just based around where the fair value gaps are at, right? It obviously wanted to run down to this fair value gap right here on the 1 hour time frame before running higher. There was a low right here, a low right here. It wanted to sweep out those lows before heading higher. So obviously in this day, it did whatever it wanted to do. And so like obviously the goal of the Judas swing wasn't to move in the opposite direction. Or if it was, the Judas swing was much bigger. It wasn't just that 1 hour. So let's try to find a Judas swing that was within the first hour moving in the opposite direction before expanding. This might be a good example because there's big wicks. But typically, if you are looking for that Judas swing and you get an expansion move like this, where it moves in the opposite direction, enough to the point where you get a IFVG, just like this, then you can use that IFVG as your like confirmation to go lower. Now, it doesn't look like it respected it too well here, because it obviously ran up above before going lower. I'm not sure exactly what it was using here. Maybe it was using the midpoint of this wick. Let's check this out. Yeah, so I'm not sure. The price action wasn't too good in this day. But typically the characteristic for London session is going to be, let's see one more example. There you go, perfect. So first, this is exactly what I wanted to see. So in the first hour from the open, we typically begin to move in the opposite direction of the narrative. And this is exactly the kind of move we like getting. And if it's big enough to the point where you literally get a few inefficiencies like this, fair value gap right there, we have a fair value gap right here. Actually, there was no fair value gap right there. But we had an IFEG right there, and then it obviously respected this bullish one right here. So the first hour moved away from, or even the first 30 minutes, moved away from the narrative, and then that move ended up sweeping some liquidity and causing the real move to happen afterwards. Now, it's not the best depiction once again, but I have seen it happen so many times over and over again. Now I'm just looking at literally the previous days that are coming up to it, but this is what we typically look for inside of London session. London session moves away from the narrative in a bullish bias. It moves down, bearish, and if inside of this bearish leg we get FVGs, we expect the silver bullet, which starts at 3, to run up and use these as IFVGs to actually go towards the true narrative, which would be buy side in this case. And so you can see, let's see, at 3 o'clock what happened. We already did that. We already had this huge move beforehand, and it ended up just using the FVGs inside of this leg probably. Let's see here. I'm not sure in this day. It's hard to say without using all the other higher time frame context. But the typical narrative that we expect is first hour runs away from the narrative, and then the silver bullet actually runs towards it. And I like using the 30-minute time frame typically to find a bigger run in the opposite direction, right? Because it's 1 hour, so if we get 3 30-minute candles, 1 hour 30, and then the next one in silver bullet actually closes above, that's when I typically get that expansion. So let's hop back to the daily time frame and sketch that out. I'm not sure where all that went. Oh, there you go. Okay, so for Asia session, these are the keynotes: daily candle, daily wick, breaker block structure, IFEGs. Similarly to the Asia session where it moves in the opposite direction and then we look for that IFEG for the continuation, like a breaker block structure. For London session, we're essentially looking for it after a move like this, where we get the Asia session high, lower low, higher high, and we're moving higher. London session would typically retrace, like you saw it swept the Asia session low, maybe back into the IFEG. This would be the fake out move that we were expecting, and then we could once again look for IFEGs and then continuation up higher. And then essentially at this point right here, if it's a pair like gold where it does expand during Asia session, we would get the open, and by London session we would already have a pretty decent expansion on the daily candle, just like that. And then if there's news during New York session, then the news can obviously retrace this daily candle. It can push it back down like this, and then you get the wick on both sides, and then in New York session you're once again looking for the expansion towards wherever the daily candle wants to actually close for the day. So the narrative for London session is going to be starting from here, right? We want to see that Judas swing run in the opposite direction. There's also another characteristic, which is the continuation, right? So instead of actually pulling down, if the market isn't extremely bullish for the day, we might just run from a regular FVG and continue the move. So that's what actually happened in the example I was showing you guys. Where was it? I believe it was the 5-minute. So you can see right here we continued the move from Asia session, right? We ran down, ran up, and then we continued the move in London towards buy side. This does look like a pretty choppy day though. So we were moving sideways up until London session. And so Asia session obviously didn't start from much lower. So it looks slightly different. Now, for a New York session, this is going to be the longest and most complicated one. Inside of New York session, we have a lot of different things that we can consider. So first of all, New York session. I'm not going to be able to find examples for each of these, so I'm just going to try to break it down separately. Let's review these two first. So for Asia session, the characteristic is much like a breaker block. You have to pay attention to the daily candle. I use an indicator for that. We have a daily wick. That's what actually we're looking for the market to create a daily wick, and from the wick moving in the opposite direction, we then look for that breaker block structure. Now for London session, we have Judas swing, which is the first hour, and then we have silver bullet, which is at 3 a.m. So after they move in the opposite direction, the silver bullet begins to move in the actual direction, and we either expect some sort of continuation or IFVGs, right? Now for New York session, starting from 7 a.m. 7 a.m., typically if there's already a big range like this, if there's a news event, it likes to pull back on the daily candle. So let's pretend like right here, the daily candle has already expanded like this, right? We got the daily candle, our little wick, and this is how the daily candle looks. All of a sudden, during New York session, we have a news event. So now the daily candle, boom, there's a wick, and it pulls back all the way right here on the daily time frame. So here's the wick. It's down here right now, and that's the big wick from where it just was at, right? This is how it looks. And essentially what you're looking for during this New York session open at 7 a.m. is you're looking for the market to pull back to an optimal level where you can enter for a continuation. And so you use something optimal trade entry, where you're looking for it to come down to the 0.62 or 0.705, that range, the golden Fibonacci range, for it to continue to expand towards buy side. Okay, so that's what you're looking for during the first hour, 7 a.m., 8 a.m. You're looking for it to come down, retrace the daily candle, and then once again from this daily candle range, like you might think, oh, it's going to start running on sell side and turn into a bearish daily candle, but it just pulls back towards the optimal trade entry before continuing back up and finishing off the daily candle wherever it wants to close. Okay, so that's how you trade that first. That's typically the characteristics that I see during 7 a.m., 8 a.m., first hour of New York session. Now remember, all of this stuff you want to create a model out of, you just hop into your own charts and watch to see what happens over and over again, because all of these characteristics, like they switch up, they intertwine. Some of them happen earlier, some of them happen later, and so it's best to just be aware of all the different characteristics and understand how you can trade them, and then you just adapt and see, oh, okay, it looks like an optimal trade entry right now, even though it's like PM session or whatever. Right, so you can use the different characteristics during different times. And so your most important factor is thinking, like, I'm just telling you where I've seen it happen the most, and over the years when I was learning from ICT, this is the times that he would teach me to look for this stuff. Next, 7, 8 a.m., maybe 9 a.m. 9 a.m. is also the expansion of, or like the open of like the stock market. So typically there's a lot of volatility during NASDAQ at 9 a.m. and that's like when people consider the open. So there's a ton of volatility, and oftentimes if you go to Forex Factory, you'll see that there's news events typically at 8:30 a.m. So this one in my time zone is 5:30, but in New York time zone, let's see if I can switch it. In New York session. What is the New York session time zone? There you go. Eastern time. So you can see that this would be at 8:30 a.m., right? And that means that there's a news event that like moves the market, as I was showing you, back maybe towards the optimal trade entry or whatever else, and you'd get another chance to catch the daily move. If, like, say you can't trade Asia or London, then you would be able to catch the same exact move that happened during those two sessions inside of New York. And that's why typically it's very difficult for people to actually trade and hold a position from like Asia, because sometimes, or like London, because it's like in the middle of the daily range and you might think that you might be able to hold it with a tight stop loss, but during New York session it'll come down, take you out before continuing back up. And that's why people always get frustrated and they're like, oh, why did it take out my stop loss and then continue higher, and then they cry about it. Because there's different characteristics, like people want to be, the big money wants to be catching the same trade, the same move that you did. So they're going to manipulate price to an entry level that's optimal for them, like a discount. And so it's going to go right back where you entered before continuing higher. Because there's new orders just barely getting in during New York session while you were holding yours from London. You were greedy, you didn't take the money out, and so they manipulated you again. You weren't able to hold your trade. And so at 9 a.m., you're typically getting some sort of expansion similar to that. At 10 a.m. is the open of a new 4-hour candle. So one of the characteristics that I expect, and the way that me and Chris trade the silver bullet, is by using the 4-hour power of 3. So the same thing that we would use for the daily time frame, but we're looking at the 4-hour. We're thinking, okay, there's a new 4-hour candle. What's the daily candle trying to close at? And on the 4-hour time frame, are there fair value gaps? Is there something relevant that the 4-hour candle might want to run to before going to the other side? And so you try to catch this like trade from one 4-hour FVG to another, or to some liquidity, and you're expecting where the 4-hour candle wants to expand to. And that's one of the advantages that you have trading the silver bullet. Then there's a lot of lower time frame things that you can do. 12 p.m. lunch hour is typically a session that, or like a time that runs an hour that runs towards buy side. You typically see some like choppy movement towards buy side, and then all of a sudden we chop down. Me and Chris created a model called the lunch hour raid, which is a like move inside of a macro where we expect it to run down and then later come up and sweep out that lunch hour high, the highest point created during lunch hour. So lunch hour is another thing. You don't necessarily always want to trade lunch hour, because the most significant thing is waiting for lunch hour to end and then trying to target the high that was created during lunch hour, like later in the day or after lunch hour ends, because sometimes the lunch hour can be like this and then it runs down, right? And then you might have been looking for it to run on buy side, but it didn't that day. But this high is still significant, and then it comes up and sweeps it out. So the high is still significant even though it didn't run on buy side the entire lunch hour. Then there's 2 p.m. silver bullet. Once again, it's just kind of like you're thinking later in the day. This is when the daily candle closes. So let's go to the 30-minute time frame again. Let's go inside of this daily candle right here. So let's pay attention to this big daily candle. After Asia, we get this move, right? We ran up, created a FVG. We got that higher high, lower low right there. You see that? So we ran up, we created a little high from the open. We got the higher high, and now we're creating a lower low. You saw that came below, came back into the low breaker, and then it ran down lower. So that's the little breaker block range that we're looking for. Once again, we created a high, higher high, lower low. Okay, so that's what we see during Asia session. London session was a little bit of we had a reversal. And then New York session, look at this. From the optimal trade entry of the daily range, we run back down. This one, it looks like it actually came a little bit higher than that. Perfect. Okay, so from the daily range, right, during the first hour of New York session, 7 a.m., we were inside of the optimal trade entry, and then we expanded back towards sell side because the daily candle seemed to have wanted to close like below, or like in this first hour. So we had that like daily range, and we had the optimal trade entry that gave us a continuation. The same move that you caught during Asia or London, right? London had a little bit of sell side here too. You would have been able to catch that same exact move in a faster pace during New York session. So obviously it ended up running back up. But that's not the main thing. The main thing is thinking, okay, look, now that it's 11, here we have lunch hour. Let's see what happens during lunch hour. 11:30. There you go. 2 candles during lunch hour, or one more. Now lunch hour is finished. We have a high created during lunch hour. Let's see if this high gets targeted. And then 2 p.m. 2 p.m. is the silver bullet. So now at this time, look at what the daily candle is. And this is when the daily candle is coming to a close, right? Every day, there is a new daily candle. And it's coming to a close after New York session. So PM session is the very last little volatility in the market. And essentially what this volatility is aiming to do is to run to wherever the daily candle wants to close. It's going to be hard for me to show you that in replay mode, and you're just going to have to follow along my weekly analysis and see how I do it in the live market. But essentially, you're wondering, where is this daily candle going to close? Like if there's a FVG right here above on the daily candle and it wants to close up here, then during PM silver bullet like this, you're going to be expecting it to run on buy side. You're going to be expecting it to run up and close somewhere closer towards this FVG. And so you would be bullish during the silver bullet in the afternoon. Now that's not what happened, but you can see right here, let's go back a little bit. You can see that the daily candle wanted to close. I'm not sure what this big gap is that I have marked out. It might be a fair value gap, and so that's where it wanted to close. But you can see that it's pulling back to wherever the daily candle wants to close, right? And that would be like what you're aiming to target that specific day. And boom, you run down, and this is how the daily candle ended up closing before the new one opened, right? And so that's what you look for during PM silver bullet. You're looking for wherever the daily candle wants to close. And yeah, that's it. That's a lot of different session characteristics. I can go on, and it's I can only do so much explaining inside of a YouTube video in replay mode. The best way that you can learn from me is to watch me do it live in the market, call it out before it happens every day, like looking through the different time frames when I send out a trade in my Telegram. And you can find all that stuff linked in the bio, so just click the captions below and you can slide into my Telegram. It's completely free, and I just send out like my trades occasionally in there. I can show you guys what I'm aiming for. I also do weekly recap videos where I break down my trades and why I looked for it, and I feel like that's the best way where I can actually explain it. But yeah, episode 5 was on session characteristics. I hope you learned basically everything there was to learn. Now you have to like go in and like analyze it yourself, figure out how you can actually like take advantage of this, which one you see repeating in whatever pair that you're trading, and go master it. Catch you guys in episode 6.